Question 1. The monitoring system demonstrates a pattern of discrepancies between the quantity of items physically present in a warehouse and the quantities recorded in Oracle Inventory Cloud. To address this, a proposed solution involves implementing a manual reconciliation process at the end of each business day, where warehouse staff compare physical counts to system records and manually adjust discrepancies. Which of the following approaches best aligns with the regulatory framework and best practices for Oracle Inventory Cloud 2020 implementation essentials, ensuring data integrity and auditability? Option A. Rely solely on periodic full physical inventory counts conducted annually to identify and correct all discrepancies, assuming minor daily variations are acceptable. Option B. Implement a daily manual reconciliation process where warehouse staff compare physical counts to system records and manually adjust discrepancies outside of the standard Oracle Inventory Cloud transaction processes. Option C. Configure and utilize the cycle counting and physical inventory features within Oracle Inventory Cloud to identify and correct discrepancies, ensuring all adjustments are properly documented and approved through system workflows. Option D. Bypass standard inventory transaction workflows and record all inventory adjustments directly in the general ledger to reflect the physical counts, without updating Oracle Inventory Cloud. The correct answer is C. Configure and utilize the cycle counting and physical inventory features within Oracle Inventory Cloud to identify and correct discrepancies, ensuring all adjustments are properly documented and approved through system workflows. Explanation. This scenario is professionally challenging because it requires balancing operational efficiency with strict adherence to regulatory compliance within the Oracle Inventory Cloud environment. The core challenge lies in ensuring that inventory transactions, which are critical for financial reporting and supply chain integrity, are accurately recorded and auditable, thereby meeting the requirements of the Oracle Inventory Cloud 2020 Implementation Essentials Framework. The need for absolute priority in jurisdiction requirements, as stipulated by the exam's constraints, means that any solution must strictly align with the specified regulatory framework without deviation. The correct approach represents best professional practice because it directly addresses the need for accurate and compliant inventory management by leveraging the built-in audit trail capabilities of Oracle Inventory Cloud. This ensures that all inventory movements are traceable, verifiable, and comply with the implicit regulatory expectations of data integrity and accountability inherent in financial and operational systems. By focusing on the system's inherent audit features, the solution demonstrates a proactive and compliant stance, minimizing the risk of regulatory noncompliance and financial misstatement. An incorrect approach that relies on manual reconciliation processes introduces significant risks. This method is prone to human error, delays in data capture, and a lack of real-time visibility, all of which can lead to discrepancies that are difficult to trace and rectify. From a regulatory perspective, manual processes often lack the robust audit trails required by compliance frameworks, making it challenging to demonstrate adherence to data integrity standards. This can result in audit failures and potential penalties. Another incorrect approach that involves bypassing standard inventory transaction workflows to record adjustments directly in the general ledger bypasses the fundamental controls and auditability of the inventory subledger. This creates a disconnect between physical inventory and financial records, undermining the accuracy of both. Regulatory bodies expect a clear and auditable link between operational transactions and financial reporting. Such a bypass would likely be flagged as a significant control weakness, leading to compliance issues and potential financial misstatements. The professional reasoning process for similar situations should involve a thorough understanding of the Oracle Inventory Cloud's functionalities, particularly its audit and traceability features. Professionals must prioritize solutions that inherently support regulatory compliance by ensuring data accuracy, completeness, and auditability. When faced with a compliance requirement, the first step is to identify how the system's standard features can be configured or utilized to meet that requirement. If standard features are insufficient, then a gap analysis should be performed, and any proposed workarounds must be rigorously assessed for their impact on auditability and compliance before implementation. The decision-making framework should always favor solutions that enhance, rather than diminish, the system's inherent control environment and regulatory adherence. Question 2. Investigation of how an Oracle Inventory Cloud implementation consultant should ensure compliance with U.S. Occupational Safety and Health Administration (OSHA) Hazard Communication Standard (HAZCOM) requirements when managing a diverse inventory that includes chemicals classified as hazardous. Option A. Implement generic inventory controls in Oracle Inventory Cloud without specific configurations for hazardous materials, as long as the materials are physically segregated. Option B. Rely on physical labeling of all hazardous materials on the warehouse shelves and assume that this is sufficient for OSHA HAZCOM compliance. Option C. Configure Oracle Inventory Cloud to classify hazardous materials, link safety data sheets (SDS) to relevant items, and establish appropriate handling and storage rules within the system to align with OSHA HAZCOM mandates. Option D. Maintain a separate, manual spreadsheet outside of Oracle Inventory Cloud to track hazardous material details and SDS, bypassing system integration. The correct answer is C. Configure Oracle Inventory Cloud to classify hazardous materials, link safety data sheets (SDS) to relevant items, and establish appropriate handling and storage rules within the system to align with OSHA HAZCOM mandates. Explanation. Scenario analysis. This scenario presents a professional challenge in ensuring regulatory compliance within Oracle Inventory Cloud, specifically concerning the tracking and reporting of hazardous materials. The core difficulty lies in accurately identifying, classifying, and managing these materials according to the relevant U.S. regulatory framework, which is critical for safety, environmental protection, and legal adherence. Mismanagement can lead to severe penalties, operational disruptions, and reputational damage. The implementation consultant must possess a deep understanding of both the Oracle Inventory Cloud functionalities and the specific U.S. regulations governing hazardous materials in an inventory context. Correct approach analysis. The correct approach involves leveraging Oracle Inventory Cloud's built-in capabilities for hazardous material management, such as defining material classifications, associating safety data sheets, SDS, and configuring appropriate handling and storage rules. This aligns with best professional practice because it directly addresses the regulatory requirements by utilizing the system's designed features for compliance. Specifically, U.S. regulations like OSHA Hazard Communication Standard, HAZCOM, mandate proper identification, labeling, and availability of SDS for hazardous chemicals. By configuring these within Oracle Inventory Cloud, the system actively supports compliance by ensuring that relevant information is accessible and that inventory processes reflect safe handling procedures. This proactive system configuration minimizes the risk of non-compliance and promotes a safer working environment. Incorrect approaches analysis. One incorrect approach is to rely solely on manual tracking outside of Oracle Inventory Cloud. This fails to meet regulatory requirements because it bypasses the system's audit trails and reporting capabilities, making it difficult to demonstrate compliance to regulatory bodies. It also increases the risk of human error in data entry and management, which is a direct violation of the principle of maintaining accurate records as required by OSHA. Another incorrect approach is to ignore the hazardous material classification within Oracle Inventory Cloud, assuming that physical labeling is sufficient. This is a significant regulatory failure. U.S. regulations, particularly those enforced by the EPA and OSHA, require not only physical labeling, but also the classification of materials within inventory systems to inform handling, storage, and emergency response protocols. Failing to classify materials in the system means that critical safety information is not readily available to all personnel who might interact with the inventory, potentially leading to unsafe practices and non-compliance with HAZCOM standards. A third incorrect approach is to implement generic inventory control without specific configurations for hazardous materials. This is inadequate because it does not account for the unique safety, storage, and disposal requirements mandated by U.S. environmental and occupational safety regulations. For instance, specific storage conditions e.g., ventilation, segregation, for certain hazardous materials are often legally mandated and cannot be addressed by standard inventory controls. Professional reasoning. Professionals should adopt a risk-based approach, prioritizing compliance with all applicable U.S. federal and state regulations concerning hazardous materials. This involves a thorough understanding of the specific materials being inventoried and the corresponding regulatory obligations. The decision-making process should begin with identifying all relevant regulations, e.g., OSHA, EPA. Next, assess how Oracle Inventory Cloud's features can be configured to meet these requirements. This includes defining item master attributes for hazardous classifications, linking SDS, and establishing appropriate inventory policies. Regular audits and reviews of system configurations and inventory data are crucial to ensure ongoing compliance and to adapt to any changes in regulations or inventory composition. Question 3. What factors determine the appropriate configuration of lot and serial number tracking within Oracle Inventory Cloud to ensure compliance with industry-specific regulatory mandates? Option A. The specific industry regulations governing product traceability, expiration date management and recall procedures, and the geographical scope of operations. Option B. Functional capabilities of Oracle Inventory Cloud that offer the most straightforward setup for basic inventory control. Option C. The general best practices for inventory management and the desire to streamline warehouse operations for faster throughput. Option D. The perceived complexity of implementing advanced tracking features and the available budget for system customization. The correct answer is A. The specific industry regulations governing product traceability, expiration date management and recall procedures, and the geographical scope of operations. Explanation. Scenario analysis. Implementing Oracle Inventory Cloud requires adherence to various regulatory frameworks that govern inventory management, particularly concerning traceability, quality control, and data integrity. A professional implementing this system must navigate these regulations to ensure compliance, avoid penalties, and maintain operational efficiency. The challenge lies in understanding how specific regulatory requirements translate into system configurations and business processes within Oracle Inventory Cloud, especially when dealing with diverse product types and supply chains. Misinterpreting or overlooking these factors can lead to significant compliance issues, supply chain disruptions, and reputational damage. Correct approach analysis. The correct approach involves a thorough understanding of the specific regulatory requirements applicable to the industry and geographical location of the implementation. This includes regulations related to product serialization, lot traceability, expiration date management, and recall procedures. For example, in the pharmaceutical or food industries, regulations like FDA's Drug Supply Chain Security Act, DSCSA, in the U.S. or similar global track and trace mandates necessitate robust inventory controls. Oracle Inventory Cloud's features for lot control, serial number tracking, and expiration date management must be configured to meet these specific regulatory mandates. This ensures that the system can accurately record and report on the movement and status of goods, facilitating compliance with audit trails and recall processes. This approach represents best professional practice because it prioritizes legal and ethical obligations, safeguarding the organization from regulatory penalties and ensuring consumer safety. Incorrect approaches analysis. One incorrect approach is to solely focus on the functional capabilities of Oracle Inventory Cloud without considering the underlying regulatory landscape. This might lead to a system that is technically functional, but fails to meet critical compliance requirements, such as inadequate serialization or missing audit trails for regulated goods. This is a regulatory failure because it directly contravenes the legal obligations to track and trace products as mandated by relevant authorities. Another incorrect approach is to assume that generic inventory management best practices are sufficient without verifying their alignment with specific industry regulations. While general best practices are valuable, they may not address the unique and stringent requirements of regulated industries. This is an ethical and regulatory failure as it can result in non-compliance, potentially endangering public health or safety if the products are for consumption or medical use. A third incorrect approach is to prioritize cost-saving measures over comprehensive regulatory compliance configurations. This might involve disabling or inadequately configuring features like lot expiry tracking or detailed serial number tracking to reduce implementation complexity or cost. This is a severe regulatory and ethical failure, as it compromises the ability to manage product recalls effectively and can lead to the distribution of expired or compromised products, with potentially devastating consequences. Professional reasoning. Professionals should adopt a risk-based approach, starting with a comprehensive assessment of all applicable regulatory requirements for the specific inventory being managed and the jurisdictions involved. This involves consulting with legal and compliance experts. Subsequently, map these requirements to the functionalities within Oracle Inventory Cloud, ensuring that configurations and business processes fully support compliance. Regular audits and validation of the system's compliance capabilities are crucial. Decision-making should always prioritize regulatory adherence and ethical considerations, viewing compliance not as a burden, but as a fundamental aspect of responsible business operations. Question 4. When evaluating the implementation of lot-controlled items in Oracle Inventory Cloud for a pharmaceutical distributor, and considering the strict regulatory requirements for product traceability and recall management, which configuration approach best ensures compliance with these mandates? Option A. Rely on manual tracking processes outside of Oracle Inventory Cloud for lot-specific details, assuming the system's standard inventory tracking is sufficient. Option B. Enable lot control at the item level for all items designated as lot controlled by regulatory bodies, ensuring that lot-specific information is captured and tracked throughout the inventory lifecycle. Option C. Implement serial number control instead of lot control, as serial numbers also provide a form of product identification. Option D. Configure lot control only at the sub-inventory level, assuming that lot information can be inferred from other inventory attributes. The correct answer is B. Enable lot control at the item level for all items designated as lot controlled by regulatory bodies, ensuring that lot-specific information is captured and tracked throughout the inventory lifecycle. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficient inventory management with strict adherence to regulatory compliance, specifically concerning the traceability and accuracy of inventory data. The Oracle Inventory Cloud 2020 Implementation Essentials exam focuses on implementing solutions that meet business needs while respecting the underlying legal and operational frameworks. In this context, the challenge lies in ensuring that the chosen configuration for lot-controlled items directly supports the regulatory requirement for accurate and auditable tracking of goods, which is paramount for quality control, recall management, and potential legal investigations. The correct approach represents best professional practice because it prioritizes the integrity of the data by directly aligning the system's lot control configuration with the regulatory mandate for granular traceability. By enabling lot control at the item level, the system is designed to capture and manage lot-specific information from the point of receipt through to consumption or sale. This ensures that every movement and transaction of a lot-controlled item is recorded, providing an unbroken audit trail that is essential for compliance with regulations that demand precise tracking of product origins, manufacturing dates, and expiry dates. This proactive configuration minimizes the risk of data discrepancies and ensures that the organization can readily provide accurate information to regulatory bodies. An incorrect approach that fails to enable lot control at the item level for items that are inherently lot controlled by regulation would be a significant regulatory and ethical failure. This would lead to incomplete or inaccurate inventory records, making it impossible to fulfill regulatory requirements for traceability. For example, if a recall is initiated, the inability to precisely identify all affected units due to a lack of lot-level tracking would expose the organization to severe penalties, reputational damage, and potential harm to consumers. Another incorrect approach, such as relying solely on serial number control when lot control is mandated, would also fail to meet the specific regulatory requirements for lot-based tracking, even if serial numbers provide a different form of traceability. This would be a failure to understand and implement the correct control mechanism as dictated by the relevant regulatory framework. The professional decision-making process for similar situations should involve a thorough understanding of the applicable regulatory requirements for inventory management and traceability. This includes identifying which product categories or specific items are subject to lot control mandates. Once identified, the implementation team must then translate these regulatory requirements into system configurations within Oracle Inventory Cloud. This involves a detailed review of item master data and the selection of appropriate control attributes, such as lot control, at the item level. A risk-based approach should be adopted, where the potential consequences of non-compliance are carefully considered when making configuration decisions. Regular consultation with legal and compliance departments, is crucial to ensure that the implemented solution remains aligned with evolving regulatory landscapes. Question 5. The risk matrix shows a high likelihood of unauthorized access to sensitive customer order data linked to inventory items. Given the organization operates within the United States and handles payment card information, which of the following configuration strategies within Oracle Inventory Cloud best addresses the associated regulatory compliance requirements? Option A. Rely solely on the default security settings provided by Oracle Inventory Cloud without any custom configurations, assuming they meet all industry standards. Option B. Store all customer order data in plain text within the inventory system to ensure easy retrieval and analysis by all authorized users. Option C. Enable broad access for all warehouse staff to view all inventory-related order data to facilitate quick order fulfillment and reduce response times. Option D. Implement role-based access controls that grant users only the necessary permissions to perform their job functions, ensuring that access to sensitive order data is restricted to authorized personnel, and configure data encryption for sensitive fields. The correct answer is D. Implement role-based access controls that grant users only the necessary permissions to perform their job functions, ensuring that access to sensitive order data is restricted to authorized personnel, and configure data encryption for sensitive fields. Explanation. This scenario presents a common challenge in implementing Oracle Inventory Cloud where regulatory compliance, specifically related to data privacy and security within the U.S. jurisdiction, intersects with system configuration. The professional challenge lies in balancing the need for efficient inventory management with the stringent requirements of regulations like HIPAA, Health Insurance Portability and Accountability Act, or PCI DSS, Payment Card Industry Data Security Standard, depending on the nature of the inventory and its associated data. Incorrectly configuring access controls or data handling processes can lead to severe penalties, reputational damage, and loss of customer trust. The correct approach involves a thorough understanding of the specific U.S. regulations applicable to the inventory data being managed within Oracle Inventory Cloud. This means identifying sensitive data elements, understanding data residency requirements, and implementing access controls that adhere to the principle of least privilege. For instance, if the inventory includes medical supplies, HIPAA compliance would necessitate robust controls to protect protected health information (PHI). If the inventory involves payment card data, PCI DSS compliance would be paramount. Configuring the system to encrypt sensitive data at rest and in transit, implementing multi-factor authentication for privileged users, and establishing detailed audit trails are critical steps. This approach represents best professional practice because it proactively addresses regulatory mandates, minimizes the risk of data breaches and noncompliance, and ensures the integrity and confidentiality of sensitive inventory-related information, thereby safeguarding the organization and its stakeholders. An incorrect approach would be to prioritize system functionality or ease of access over regulatory requirements. For example, granting broad access to inventory data without proper segregation of duties or without considering the sensitivity of the data would be a significant regulatory failure. This could violate data privacy laws by exposing sensitive information to unauthorized personnel. Another incorrect approach would be to assume that default Oracle Inventory Cloud security settings are sufficient for all regulatory environments. This overlooks the fact that regulatory requirements are specific and often demand custom configurations. Failing to implement data masking or anonymization for non-essential personnel accessing sensitive inventory data would also be a regulatory failure, potentially leading to unauthorized disclosure of confidential information. Professionals should employ a risk-based decision-making framework. This involves 1. Identifying all applicable U.S. regulations based on the type of inventory and data handled. 2. Conducting a comprehensive data classification exercise to identify sensitive data elements. 3. Mapping regulatory requirements to specific Oracle Inventory Cloud features and configurations. 4. Implementing controls that align with the principle of least privilege and data protection best practices. 5. Establishing robust monitoring and auditing mechanisms to ensure ongoing compliance. 6. Regularly reviewing and updating configurations as regulations or business needs evolve. Question 6. System analysis indicates that a US-based company implementing Oracle Inventory Cloud needs to ensure its inventory valuation and cost of goods sold reporting accurately comply with U.S. Generally Accepted Accounting Principles, GAAP, for its annual financial statements. The company currently uses a standard costing method for day-to-day operational tracking and variance analysis due to its ease of use in production planning. However, this method may not always align with the actual costs incurred, which is a concern for financial reporting accuracy. What is the most appropriate approach to configure Oracle Inventory Cloud to meet both operational needs and U.S. GAAP compliance for financial reporting? Option A. Configure Oracle Inventory Cloud to use a weighted average cost method for financial reporting purposes, while continuing to use standard costing for operational tracking and variance analysis, ensuring a reconciliation process is in place. Option B. Manually adjust inventory values in the general ledger outside of Oracle Inventory Cloud to reflect GAAP requirements after operational reporting is complete. Option C. Focus solely on optimizing operational efficiency within Oracle Inventory Cloud and disregard the specific costing method's impact on financial reporting accuracy. Option D. Implement only the standard costing method within Oracle Inventory Cloud for all inventory valuation and cost of goods sold reporting to maintain simplicity. The correct answer is A. Configure Oracle Inventory Cloud to use a weighted average cost method for financial reporting purposes, while continuing to use standard costing for operational tracking and variance analysis, ensuring a reconciliation process is in place. Explanation: Scenario analysis. This scenario presents a common challenge in implementing Oracle Inventory Cloud, where a company needs to ensure its inventory processes comply with U.S. Generally Accepted Accounting Principles, GAAP, for financial reporting. The core difficulty lies in accurately reflecting inventory valuation and cost of goods sold (COGS) in the financial statements, especially when using different costing methods for operational efficiency versus financial reporting accuracy. The need to reconcile these potentially divergent methods without compromising regulatory compliance or operational agility requires a deep understanding of both the system's capabilities and accounting standards. Correct approach analysis. The correct approach involves configuring Oracle Inventory Cloud to support multiple costing methods, specifically enabling the use of a standard cost for operational tracking and a weighted average cost for financial reporting. This is best professional practice because it directly addresses the requirement to comply with U.S. GAAP. U.S. GAAP mandates that inventory be valued at the lower of cost, or net realizable value, and that COGS be accurately reported. By using a weighted average cost for financial reporting, the company ensures that its inventory valuation and COGS are calculated in a manner consistent with GAAP principles, providing an accurate representation of the company's financial position. This approach leverages the system's flexibility to meet both operational and regulatory demands, minimizing the risk of financial misstatement and audit issues. Incorrect approach is analysis. One incorrect approach is to solely rely on the standard cost method for all inventory valuation and COGS reporting. This is a regulatory failure because standard costs, while useful for budgeting and variance analysis, may not accurately reflect the actual cost of inventory under GAAP, especially if there are significant material price or usage variances. GAAP requires a cost that is a more faithful representation of actual expenditure. Another incorrect approach is to manually adjust inventory values in the general ledger without a clear, auditable process within Oracle Inventory Cloud. This is an ethical and regulatory failure as it bypasses the system's controls, making financial reporting unreliable, difficult to audit, and prone to errors. It also violates the principle of maintaining accurate and transparent financial records. A third incorrect approach is to ignore the financial reporting implications of inventory costing and only focus on operational efficiency. This is a significant regulatory failure as it directly leads to noncompliance with U.S. GAAP, potentially resulting in inaccurate financial statements, penalties, and reputational damage. Professional reasoning. Professionals should approach such situations by first understanding the specific regulatory requirements, in this case, U.S. GAAP, for inventory valuation and COGS. They should then analyze the capabilities of Oracle Inventory Cloud to support these requirements. The decision-making process should prioritize solutions that ensure compliance while maintaining operational efficiency. This involves a thorough review of system configuration options, understanding the implications of different costing methods, and ensuring that any chosen method is auditable and transparent. Collaboration between finance, accounting, and IT teams is crucial to validate that the implemented solution meets all regulatory and business needs. Question 7. Governance review demonstrates that while Oracle Inventory Cloud is implemented for managing stock levels, the configuration for tracking lot and serial numbers for regulated items is inconsistent, potentially impacting audit readiness. Which approach best ensures compliance with regulatory requirements for inventory traceability? Option A. Configure lot and serial number control at the item master level for all items requiring regulatory tracking. Option B. Implement lot and serial number control only at the sub-inventory or locator level for specific high-value items. Option C. Rely on manual tracking processes and separate spreadsheets for lot and serial number data for regulatory reporting. Option D. Enable lot and serial number control only for specific transaction types that are flagged as high risk. The correct answer is A. Configure lot and serial number control at the item master level for all items requiring regulatory tracking. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the efficiency of inventory management with the stringent requirements of regulatory compliance, specifically concerning the traceability and accuracy of inventory data. The Oracle Inventory Cloud System, while designed for efficiency, must be configured and utilized in a manner that adheres to the specific regulatory framework governing inventory in the relevant jurisdiction. The challenge lies in ensuring that the system's functionalities, such as lot and serial number tracking, are not merely implemented for operational convenience, but are robust enough to meet audit and compliance demands. Misinterpreting or overlooking these requirements can lead to significant financial penalties, reputational damage, and operational disruptions during audits. Correct approach analysis. The correct approach involves configuring Oracle Inventory Cloud to enforce lot and serial number control at the item master level for all items subject to regulatory tracking. This aligns with best professional practice because it embeds the compliance requirement directly into the system's fundamental setup for those specific items. By making lot and serial number tracking mandatory from the outset, the system inherently prevents the creation or movement of inventory without this critical data. This proactive measure ensures data integrity and traceability throughout the inventory lifecycle, which is paramount for regulatory audits and compliance. It demonstrates a commitment to building compliance into the core processes, rather than relying on manual checks or post hoc corrections, thereby minimizing the risk of non-compliance. Incorrect approaches analysis. Implementing lot and serial number control only at the sub-inventory or locator level, or only for specific transactions, represents a significant regulatory and ethical failure. This approach creates gaps in traceability. If lot or serial numbers are not mandatory at the item master level, there's a risk that items could be received or transacted without this information being captured, even if it's later attempted at a sub-inventory level. This leads to incomplete audit trails, which are unacceptable to regulatory bodies. Ethically, it suggests a superficial approach to compliance, prioritizing operational ease over the fundamental requirement for accurate and complete record keeping. Relying solely on manual processes or separate spreadsheets to track lot and serial numbers for regulatory purposes, while using Oracle Inventory Cloud for general inventory management, is another critical failure. This creates data silos and introduces a high risk of data discrepancies between the ERP system and the manual records. Regulatory bodies require a single, verifiable source of truth. Manual tracking is prone to human error, is time-consuming, and makes it difficult to provide real-time, accurate reports. This approach fails to leverage the capabilities of the Oracle Inventory Cloud system for compliance and demonstrates a lack of due diligence in establishing robust, integrated control mechanisms. Professional reasoning. Professionals tasked with implementing Oracle Inventory Cloud for inventory management must adopt a risk-based approach to compliance. This involves understanding the specific regulatory requirements of the jurisdiction, in this case, implied by the exam's focus on a single jurisdiction's framework, and mapping those requirements to system functionalities. The decision-making process should prioritize configurations that enforce compliance by design. This means identifying critical data elements, like lot and serial numbers for regulated items, and making their capture mandatory within the system's core setup. Regular reviews of system configurations against evolving regulatory landscapes are also essential. When faced with choices between operational efficiency and compliance, compliance must always take precedence, as the consequences of non-compliance far outweigh any perceived short-term gains in efficiency. Question 8. System analysis indicates that a critical component for a key product line is experiencing unexpected production delays from its sole approved supplier, potentially impacting the ability to meet forecasted demand. What is the most appropriate risk mitigation strategy to implement within the Oracle Inventory Cloud environment? Option A. Immediately switch to a new, unvetted supplier to ensure continuous supply without further investigation. Option B. Halt all production of the affected product line until the primary supplier resolves their production issues. Option C. Rely solely on the primary supplier's assurance that the production delay will be minimal and continue with current inventory levels. Option D. Proactively identify and qualify alternative suppliers for the critical component and explore expedited shipping options with the primary supplier. The correct answer is D. Proactively identify and qualify alternative suppliers for the critical component and explore expedited shipping options with the primary supplier. Explanation. Scenario analysis. This scenario presents a common challenge in inventory management where a critical component's availability is uncertain due to a supplier's production issues. The professional challenge lies in balancing the immediate need for production continuity against the potential financial and operational risks associated with alternative sourcing or production delays. The Oracle Inventory Cloud implementation context adds a layer of complexity, as the chosen solution must align with the system's capabilities and best practices for risk mitigation within the platform. Careful judgment is required to select a strategy that is both operationally sound and compliant with internal controls and potential regulatory requirements related to supply chain transparency and product integrity. Correct approach analysis. The correct approach involves a proactive risk assessment and mitigation strategy that leverages the Oracle Inventory Cloud's functionalities. This includes identifying alternative, pre-qualified suppliers and exploring the feasibility of expedited shipping or air freight for the critical component. This strategy represents best professional practice because it directly addresses the identified risk with concrete, actionable steps, prioritizes business continuity by seeking immediate solutions, while also considering cost-effectiveness and lead times. From a regulatory and ethical standpoint, this approach demonstrates due diligence in ensuring a stable supply chain, which is crucial for meeting customer commitments and maintaining product quality. It aligns with principles of responsible sourcing and supply chain resilience, which are increasingly important in global business operations. Incorrect approaches analysis. One incorrect approach is to simply wait for the primary supplier to resolve their production issues without exploring alternatives. This is professionally unacceptable as it exposes the organization to significant operational disruption, potential loss of revenue, and damage to customer relationships. Ethically, it fails to uphold the commitment to reliable product delivery. Another incorrect approach is to immediately switch to a new, unvetted supplier without proper qualification. This introduces a new set of risks, including potential quality issues, non-compliance with specification, and disruptions to the production schedule if the new supplier also faces challenges. This approach bypasses essential risk assessment and quality control processes, which can have severe regulatory implications if product quality or safety is compromised. A third incorrect approach is to halt production entirely until the primary supplier can resume deliveries. While seemingly risk-averse in terms of component quality, this is professionally unsound due to the severe financial impact of idle production lines and the potential for losing market share to competitors. It demonstrates a lack of strategic planning and risk management. Professional reasoning. Professionals should adopt a structured risk management framework. This involves identifying potential risks, e.g., supplier disruption, assessing their impact and likelihood, and developing mitigation strategies. In the context of Oracle Inventory Cloud, this means utilizing system features for supplier management, inventory planning, and demand forecasting to anticipate and respond to such events. The decision-making process should prioritize solutions that maintain operational continuity, ensure product quality, and comply with all relevant business policies and ethical standards. When faced with uncertainty, a tiered approach to mitigation, starting with the least disruptive and most cost-effective options, is generally preferred. Question 9. Market research demonstrates that organizations often underestimate the potential pitfalls during the implementation of new inventory management systems. Considering the critical nature of inventory data accuracy and operational continuity, which of the following approaches best mitigates the inherent risks associated with deploying Oracle Inventory Cloud? Option A. Focus exclusively on the technical configuration and data migration aspects of Oracle Inventory Cloud, assuming that business process adjustments will naturally occur post-implementation. Option B. Conduct a thorough risk assessment involving key business stakeholders, IT personnel, and end users to identify potential issues across business processes, data integrity, security, and system integration, followed by developing targeted mitigation plans. Option C. Rely solely on the vendor's default configuration settings for Oracle Inventory Cloud, assuming they are optimized for all business scenarios and require no further validation. Option D. Prioritize the rapid deployment of Oracle Inventory Cloud to gain immediate operational benefits, deferring comprehensive user training and detailed testing until after the system is live. The correct answer is B. Conduct a thorough risk assessment involving key business stakeholders, IT personnel, and end users to identify potential issues across business processes, data integrity, security, and system integration, followed by developing targeted mitigation plans. Explanation. This scenario presents a professional challenge because the implementation of Oracle Inventory Cloud involves managing sensitive inventory data, which, if compromised or inaccurately reported, can lead to significant financial and operational repercussions. The core of the challenge lies in the inherent risks associated with data integrity, system security, and adherence to internal controls and potential regulatory compliance requirements, even if not explicitly stated as a direct regulatory mandate for this specific exam scope. Careful judgment is required to identify, assess, and mitigate these risks effectively to ensure the system's reliability and the accuracy of inventory information. The correct approach represents best professional practice because it prioritizes a proactive and systematic identification of potential risks before and during the implementation. This aligns with the principles of good governance and risk management, which are foundational to any robust IT system implementation. By engaging stakeholders and leveraging their knowledge of business processes, the implementation team can uncover a broader spectrum of potential issues, from data migration errors to user access control vulnerabilities. This comprehensive risk assessment allows for the development of targeted mitigation strategies, ensuring that the Oracle Inventory Cloud solution is implemented securely, accurately, and efficiently, thereby safeguarding business operations and data integrity. An incorrect approach that focuses solely on technical configuration without considering business process integration would be professionally unacceptable. This failure stems from a lack of holistic understanding of how the inventory system interacts with the broader business environment. It risks overlooking critical risks such as incorrect stock valuation due to misconfigured costing methods or unauthorized stock movements due to inadequate user permissions, which could lead to financial misstatements and operational disruptions. Another incorrect approach that neglects user training and change management would also be professionally unacceptable. This oversight creates a significant risk of user error, leading to data inaccuracies and inefficient system utilization. Without proper training, users may not understand the correct procedures for inventory transactions, leading to data corruption, stock discrepancies, and a failure to realize the full benefits of the Oracle Inventory Cloud solution. This can also indirectly impact compliance by leading to inaccurate reporting. A third incorrect approach that prioritizes speed of implementation over thorough testing would be professionally unacceptable. This haste creates a high risk of undetected bugs, data corruption, and system instability. Inadequate testing can lead to critical errors in inventory counts, order fulfillment, and financial reporting, undermining the credibility of the system and potentially leading to significant business losses. The professional reasoning process for similar situations should involve a structured risk management framework. This begins with defining the scope of the implementation and identifying all relevant stakeholders. Next, a comprehensive risk identification phase should be conducted, involving brainstorming sessions, process walkthroughs, and expert interviews. Following identification, risks should be analyzed for their likelihood and impact, and then prioritized. Mitigation strategies should be developed for high-priority risks, and these strategies should be documented and assigned ownership. Finally, a continuous monitoring and review process should be established to ensure that risks remain managed throughout the implementation, life cycle, and beyond. Question 10. The risk matrix shows a high likelihood of a critical inventory item stockout due to a single supplier's production issues. Which of the following actions best addresses this identified risk within the context of Oracle Inventory Cloud's capabilities for managing supply chain disruptions? Option A. Rely solely on expediting existing orders from the sole supplier and hope for a swift resolution. Option B. Proactively identify and qualify alternative suppliers to diversify the sourcing base for the critical item. Option C. Immediately place large emergency orders with multiple new suppliers without extensive vetting to ensure immediate availability. Option D. Accept the risk and monitor the situation passively, assuming the supplier will resolve the issues independently. Correct answer is B. Proactively identify and qualify alternative suppliers to diversify the sourcing base for the critical item. Explanation. The risk matrix shows a high likelihood of a critical inventory item stockout due to a single supplier's production issues. This scenario is professionally challenging because it directly impacts the ability to fulfill customer orders, potentially leading to lost revenue, damaged reputation, and contractual penalties. The core challenge lies in balancing the cost of mitigation strategies against the potential impact of the risk. Careful judgment is required to select the most effective and cost-efficient response. The correct approach represents best professional practice because it prioritizes proactive risk mitigation by exploring alternative sourcing options. This aligns with the principles of robust supply chain management and business continuity planning, which are implicitly supported by Oracle Inventory Cloud's capabilities designed to enhance visibility and control over inventory. By investigating alternative suppliers, the organization demonstrates due diligence in safeguarding its operations against foreseeable disruptions. This proactive stance minimizes the likelihood and impact of the stockout, thereby protecting the company's financial health and customer relationships. An incorrect approach that involves solely relying on expediting existing orders from the sole supplier is professionally unacceptable. This approach is reactive and fails to address the root cause of the risk, single supplier dependency. It increases the likelihood of incurring significant expedited shipping costs, which may not even guarantee timely delivery if the supplier's production issues are severe or prolonged. This could lead to financial waste and still result in a stockout, violating the professional obligation to manage resources effectively and protect the organization from avoidable losses. Another incorrect approach, which is to accept the risk and hope the supplier resolves the issue, is ethically and professionally unsound. This passive stance ignores the high likelihood of the risk materializing and the significant potential impact. It demonstrates a lack of foresight and responsibility, potentially exposing the organization to severe financial and reputational damage. Professionals have an ethical duty to identify and manage risks that could harm the organization and its stakeholders. A further incorrect approach, such as immediately placing large emergency orders with multiple new suppliers without proper vetting, is also professionally flawed. While seemingly proactive, this can lead to significant unforeseen costs, quality control issues, and potential overstocking if the original supplier recovers quickly. It bypasses essential procurement processes and due diligence, increasing the risk of financial mismanagement and operational inefficiencies. The professional reasoning process for such situations should involve a structured risk assessment and response planning. This includes 1. Clearly identifying the risk and its potential impact. 2. Evaluating the likelihood and severity using tools like a risk matrix. 3. Brainstorming and evaluating potential mitigation strategies, considering their cost, effectiveness, and feasibility. 4. Selecting the most appropriate strategy based on a comprehensive analysis of trade-offs. 5. Implementing the chosen strategy and continuously monitoring its effectiveness. This systematic approach ensures that decisions are informed, defensible, and aligned with the organization's strategic objectives and risk appetite. Question 11. The efficiency study reveals a pattern of recurring discrepancies in the physical counts of high-value inventory items managed within Oracle Inventory Cloud. Which of the following risk assessment approaches would best address this issue while adhering to best practices for data integrity and operational efficiency? Option A. Conduct a detailed root cause analysis of the discrepancies, examining transaction logs, user activity, and system configurations related to high-value items to identify specific vulnerabilities, and then develop targeted mitigation strategies. Option B. Immediately increase the frequency of cycle counts for all inventory items across the board to compensate for the observed inaccuracies, without further investigation into the specific causes. Option C. Document the observed discrepancies as minor variances and continue with the current inventory management processes, as the impact on overall inventory value is deemed negligible. Option D. Implement a mandatory, comprehensive retraining program for all warehouse personnel on inventory counting procedures, assuming user error is the sole cause of the discrepancies. The correct answer is A. Conduct a detailed root cause analysis of the discrepancies, examining transaction logs, user activity, and system configurations related to high-value items to identify specific vulnerabilities, and then develop targeted mitigation strategies. Explanation. The efficiency study reveals a significant discrepancy in the accuracy of inventory counts for high-value items within the Oracle Inventory Cloud system. This scenario is professionally challenging because it directly impacts financial reporting, operational efficiency, and potentially compliance with internal controls and external audit requirements. The core of the challenge lies in identifying the root cause of the inaccuracies and implementing a robust risk mitigation strategy without disrupting ongoing operations or incurring excessive costs. Careful judgment is required to balance the need for accuracy with the practicalities of inventory management. The correct approach involves a systematic risk assessment process that prioritizes the identification and evaluation of potential causes for the inventory count discrepancies. This includes analyzing transaction data, reviewing user access and security logs, and examining the physical inventory processes. By understanding the specific vulnerabilities, such as potential for unauthorized adjustments, data entry errors, or system integration issues, a targeted and effective risk mitigation plan can be developed. This aligns with best professional practices in inventory management and internal controls, ensuring that the Oracle Inventory Cloud system is configured and utilized to maintain data integrity and support accurate financial reporting. This approach is ethically sound as it promotes transparency and accountability in financial data. An incorrect approach would be to immediately implement a blanket increase in cycle count frequency for all items without understanding the underlying cause. This is professionally unacceptable because it is an inefficient use of resources and does not address the root problem, potentially masking deeper systemic issues. Ethically, it could be seen as a superficial fix that fails to uphold the responsibility of ensuring accurate inventory data. Another incorrect approach is to solely blame user error and implement extensive, potentially punitive, retraining programs without investigating system configuration or process flaws. This is professionally unsound as it ignores potential system-related issues and can damage team morale. It fails to meet the ethical obligation of providing a fair and thorough investigation into the problem. Finally, an incorrect approach would be to ignore the findings of the efficiency study, assuming the discrepancies are minor or within an acceptable tolerance. This is professionally negligent and ethically problematic, as it undermines the integrity of financial data and exposes the organization to potential financial misstatements and audit failures. It demonstrates a lack of due diligence in managing critical inventory assets. The professional decision-making process for similar situations should involve a structured risk assessment framework. This includes 1. Identifying the risk inventory count inaccuracies, 2. Analyzing the risk, determining the likelihood and impact of the inaccuracies, 3. Evaluating the risk, prioritizing the most significant causes, 4. Treating the risk, developing and implementing mitigation strategies, and 5. Monitoring and reviewing the risk, ensuring the effectiveness of the implemented controls. This systematic approach ensures that decisions are data-driven, proportionate, and aligned with professional responsibilities and ethical standards. Question 12. Risk assessment procedures indicate that a new, high-value product is being introduced into the Oracle Inventory Cloud system. Initial sales projections are optimistic, but there is no historical data for this specific item to accurately forecast demand or identify potential handling risks. Which of the following approaches best mitigates the risks associated with introducing this new item into inventory? Option A. Implement minimal receiving and dispatch controls, assuming the item's high value will deter any potential loss or damage. Option B. Delay stocking the item until a perfect, long-term demand forecast can be developed through extensive market research. Option C. Implement a pilot program in a limited number of locations with enhanced monitoring and cycle counting, followed by a data-driven adjustment of safety stock levels. Option D. Stock a large quantity of the item across all distribution centers immediately to capitalize on projected high demand. The correct answer is C. Implement a pilot program in a limited number of locations with enhanced monitoring and cycle counting, followed by a data-driven adjustment of safety stock levels. Explanation. Scenario analysis. This scenario presents a common challenge in inventory management, where a new, potentially high-value item is introduced without a fully established risk assessment framework. The professional challenge lies in balancing the need for timely inventory availability to meet customer demand, with the imperative to safeguard company assets and comply with internal controls and potential regulatory requirements. Though specific external regulations are not detailed for this exam, internal controls and best practices are paramount. The lack of historical data for the new item amplifies the uncertainty, requiring a proactive and structured approach to risk mitigation rather than reactive problem-solving. Correct approach analysis. The correct approach involves a phased implementation with robust monitoring and control mechanisms. This aligns with best professional practices in inventory management and risk mitigation by acknowledging the inherent uncertainty of a new item. Implementing a pilot program in a controlled environment allows for the collection of real-world data on demand, handling, and potential loss or damage. Establishing clear receiving, storage, and dispatch procedures, along with regular cycle counts and variance analysis, provides immediate visibility into any discrepancies. The subsequent review and adjustment of safety stock levels based on this empirical data ensures that inventory levels are optimized for both service and cost, while also addressing potential risks. This methodical approach demonstrates due diligence and adherence to principles of sound financial management and operational efficiency. Incorrect approaches analysis. One incorrect approach is to immediately stock a large quantity of the item based solely on initial sales projections, without any pilot testing or granular data collection. This represents a significant regulatory and ethical failure by disregarding prudent financial management and potentially exposing the company to substantial financial loss due to overstocking, obsolescence, or theft. Bypasses essential risk assessment steps and demonstrates a lack of professional judgment in managing company assets. Another incorrect approach is to delay stocking the item indefinitely until a perfect, long-term demand forecast is available. This is professionally unsound as it prioritizes theoretical perfection over practical business needs, potentially leading to lost sales opportunities and customer dissatisfaction. Ethically, it fails to meet the company's obligation to serve its customers effectively. It also represents a failure in risk assessment by overemphasizing the risk of overstocking, while ignoring the risk of understocking and lost revenue. A third incorrect approach is to implement minimal controls, assuming the item will not be a target for loss or damage due to its perceived low-risk profile. This is a critical failure in risk assessment and internal control, demonstrates a lack of foresight and a disregard for the fundamental principle that all inventory carries some level of risk, regardless of its perceived value or nature. This can lead to unmitigated losses and a breakdown of inventory accountability. Professional reasoning. Professionals should adopt a risk-based approach to inventory management, especially for new items. This involves identifying potential risks e.g., demand volatility, obsolescence, theft, damage, assessing their likelihood and impact, and implementing appropriate controls and mitigation strategies. For new items, a phased introduction with pilot testing and continuous monitoring is a robust decision-making framework. This allows for data-driven adjustments and ensures that inventory strategies evolve with actual operational experience, balancing service levels with financial prudence and asset protection. Question 13. Benchmark analysis indicates that a new feature in Oracle Inventory Cloud promises to automate cycle counting task generation based on item velocity and historical accuracy. Before implementing this feature across all warehouses, what is the most prudent approach to mitigate potential risks to inventory accuracy and operational efficiency? Option A. Rely solely on the vendor's documentation and case studies to confirm the feature's suitability for the organization's specific inventory management needs. Option B. Prioritize the implementation of the new feature based on the perceived magnitude of its potential benefits, deferring any detailed risk analysis until after deployment. Option C. Conduct a comprehensive risk assessment, including a pilot implementation in a non-critical warehouse to validate the feature's performance and impact on existing processes before a full rollout. Option D. Immediately enable the new feature for all warehouses to leverage its benefits as quickly as possible and gain immediate efficiency improvements. Correct answer is C. Conduct a comprehensive risk assessment, including a pilot implementation in a non-critical warehouse to validate the feature's performance and impact on existing processes before a full rollout. Explanation: Scenario analysis. This scenario presents a common challenge in Oracle Inventory Cloud implementations, where a new feature, while promising efficiency gains, introduces potential risks to data integrity and operational continuity. The professional challenge lies in balancing the adoption of innovative functionality with the imperative to safeguard existing inventory processes and comply with Oracle's recommended best practices for cloud environments. The need for a thorough risk assessment is paramount because a hasty or incomplete evaluation could lead to significant disruptions, financial losses, or regulatory noncompliance if the new feature interacts negatively with existing configurations or business rules. Correct approach analysis. The correct approach involves a structured risk assessment that systematically identifies, analyzes, and plans responses to potential risks associated with the new feature. This aligns with Oracle's implementation methodologies, which emphasize a phased approach to adopting new functionalities. Specifically, it involves understanding the feature's impact on data accuracy, transaction processing, reporting, and integration points. By conducting a pilot or phased rollout in a controlled environment, the implementation team can validate the feature's performance, identify unforeseen issues, and refine configurations before a full-scale deployment. This proactive stance minimizes the likelihood of negative impacts on the live inventory system and ensures that the implementation adheres to the principles of robust system management and data governance, which are implicitly expected within the Oracle Inventory Cloud framework. Incorrect approaches analysis. Implementing the feature directly into the production environment without prior testing or risk assessment is a significant regulatory and ethical failure. This approach disregards the fundamental principle of change management and introduces an unacceptable level of risk to operational stability and data integrity. It violates the implicit expectation of responsible system deployment, which requires due diligence to prevent adverse effects on business operations. Furthermore, it could lead to data corruption or inaccuracies, potentially impacting financial reporting and compliance with inventory valuation standards. Adopting the feature based solely on vendor marketing materials without independent validation or a thorough understanding of its integration with the existing Oracle Inventory Cloud setup is also professionally unsound. This approach relies on assumptions rather than evidence, increasing the likelihood of unexpected conflicts or performance degradation. It fails to meet the professional obligation to ensure that implemented solutions are fit for purpose and do not introduce undue risk. Focusing exclusively on the potential benefits without a corresponding assessment of the risks is a biased and incomplete approach. While benefits are important, a responsible implementation requires a balanced view that considers both positive and negative potential outcomes. This oversight can lead to overlooking critical vulnerabilities that could undermine the very benefits the feature was intended to provide, or worse, cause systemic failures. Professional reasoning. Professionals should adopt a risk-based decision-making framework. This involves 1. Identifying potential risks associated with any proposed change or new feature. 2. Analyzing the likelihood and impact of each identified risk. 3. Evaluating the potential benefits against the identified risks. 4. Developing mitigation strategies for high-priority risks. 5. Planning for contingency and rollback if necessary. 6. documenting the entire process for auditability and future reference. This systematic approach ensures that decisions are informed, justifiable, and prioritize the stability and integrity of the Oracle Inventory Cloud environment. Question 14. The control framework reveals that for a new implementation of Oracle Inventory Cloud, the project team is debating the most effective strategy for managing inventory transaction to ensure accuracy and prevent unauthorized adjustments. Which approach best aligns with industry best practices for robust inventory control and operational efficiency? Option A. Implement a single, overarching security role that grants all warehouse personnel the ability to perform any inventory transaction without requiring specific approvals. Option B. Grant broad user access to adjust inventory quantities across all item categories to expedite transaction processing and minimize user training requirements. Option C. Configure system controls to automatically enforce lot or serial number tracking for all high-value items and implement mandatory receiving and shipping confirmations within the system for all transactions. Option D. Rely primarily on manual reconciliation reports generated at the end of each business day to identify and correct any inventory discrepancies. The correct answer is C. Configure system controls to automatically enforce lot or serial number tracking for all high-value items and implement mandatory receiving and shipping confirmations within the system for all transactions. Explanation. The control framework reveals a common challenge in Oracle Inventory Cloud implementations, balancing the need for granular control over inventory transactions with the operational efficiency required by warehouse staff. This scenario is professionally challenging because a poorly designed control framework can lead to either excessive manual intervention and delays, or insufficient oversight and increased risk of errors, stock discrepancies, and non-compliance with internal policies, and potentially external regulations related to inventory accuracy and traceability. Careful judgment is required to align system controls with business processes and risk appetite. The correct approach represents best professional practice because it prioritizes the establishment of robust, automated controls within Oracle Inventory Cloud that are directly tied to specific transaction types and user roles. This ensures that only authorized users can perform critical inventory movements, and that these movements are recorded accurately and in real time. This aligns with the principles of good internal control, which aim to prevent and detect errors and fraud, thereby safeguarding company assets and ensuring the integrity of inventory data. For example, implementing lot or serial number control for specific high-value or regulated items, and enforcing receiving and shipping processes through system validations directly supports inventory accuracy and traceability, which are often implicit or explicit requirements for operational efficiency and compliance. An incorrect approach that relies heavily on manual overrides or broad user permissions without adequate segregation of duties presents significant regulatory and ethical failures. It increases the risk of unauthorized transactions, data manipulation, and stockouts or overstocking due to inaccurate records. This can lead to financial misstatements, reputational damage, and potential penalties if regulatory requirements for inventory management are not met. For instance, allowing any user to adjust inventory quantities without a documented approval process bypasses essential controls, creating an environment ripe for errors or intentional misuse. Another incorrect approach might involve implementing overly restrictive controls that hinder legitimate business operations, leading to workarounds that circumvent the system entirely. This not only reduces efficiency, but also creates shadow processes that are outside the purview of the control framework, making them difficult to monitor and audit. Ethically, this can lead to frustration among staff and a perception that the system is not designed to support their work, potentially impacting morale and productivity. The professional decision-making process for similar situations should involve a thorough risk assessment of all inventory-related processes. This includes identifying critical inventory transactions, potential points of failure, and the impact of errors. Subsequently, best practices in system configuration and internal controls should be applied to design a framework that mitigates identified risks while enabling efficient operations. This often involves a phased approach, starting with essential controls and gradually introducing more sophisticated ones as the organization matures and its risk tolerance is better understood. Collaboration with business stakeholders is crucial to ensure that controls are practical and aligned with operational realities. Question 15. The risk matrix shows a high potential for inventory discrepancies in high-value, low-turnover items and a moderate risk in fast-moving, mid-value items. During the implementation of Oracle Inventory Cloud, what is the most appropriate approach to configuring cycle count policies to address these identified risks effectively? Option A. Implement a daily cycle count for all inventory items within a specific warehouse zone to ensure comprehensive coverage, irrespective of item value or turnover. Option B. Set a single, broad tolerance level for all cycle count discrepancies across the entire inventory to minimize the administrative effort of adjustments. Option C. Configure cycle count schedules to prioritize counting high-value, low-turnover items more frequently and with tighter tolerance levels, while scheduling mid-value, fast-moving items for less frequent counts with slightly broader tolerances. Option D. Rely on the system's default cycle count generation settings, assuming they are designed to cover all inventory categories equally. The correct answer is C. Configure cycle count schedules to prioritize counting high-value, low-turnover items more frequently and with tighter tolerance levels, while scheduling mid-value, fast-moving items for less frequent counts with slightly broader tolerances. Explanation. Scenario analysis. This scenario presents a common challenge in implementing Oracle Inventory Cloud, where the default system behavior for cycle counting might not align with established best practices for inventory accuracy and regulatory compliance. The challenge lies in balancing the efficiency of automated processes with the need for robust controls that prevent discrepancies and ensure data integrity, which is critical for financial reporting and operational efficiency. The risk matrix implies a pre-existing assessment of potential issues, and the implementation team must decide how to translate this assessment into actionable system configurations. The professional challenge is to avoid a set it and forget it mentality, and instead critically evaluate system defaults against business needs and regulatory expectations. Correct approach analysis. The correct approach involves a thorough review of the cycle count configuration, specifically focusing on the randomly pick one topics from this exam syllabus aspect, which in this context refers to the configuration of cycle count policies and the generation of count tasks. Best professional practice dictates that the cycle count strategy should be aligned with the criticality of inventory items and their associated risks, as identified in the risk matrix. This means configuring cycle count schedules, item selection criteria, e.g., ABC analysis, high-value items, high-turnover items, and tolerance levels to proactively identify and correct discrepancies. Systems should be configured to generate count tasks that are meaningful and actionable, rather than purely random, to maximize the effectiveness of the cycle counting process in maintaining inventory accuracy and supporting compliance. This approach ensures that resources are focused on areas with the highest potential for error or impact, thereby optimizing inventory management and minimizing financial risk. Incorrect approaches analysis. One incorrect approach would be to solely rely on the system's default cycle count generation without any customization or review. This fails to acknowledge that default settings are often generic and may not address the specific risks or operational nuances of the organization. Ethically and professionally, this demonstrates a lack of due diligence and a failure to implement controls that are adequate for maintaining accurate inventory records, which can lead to misstatements in financial reports. Another incorrect approach would be to configure cycle counts based purely on operational convenience, such as counting all items in a specific warehouse section on a given day, regardless of their value or risk profile. This approach ignores the risk matrix and the principle of prioritizing efforts based on potential impact. It is professionally unsound because it wastes resources on low-risk items while potentially neglecting high-risk areas, thus failing to achieve the primary objective of accurate inventory management and potentially exposing the organization to financial and operational risks. A third incorrect approach would be to set extremely lenient tolerance levels for cycle count discrepancies. While this might reduce the number of adjustments needed, it undermines the purpose of cycle counting, which is to identify and correct errors. Professionally, this is a failure to implement effective internal controls, as it allows significant discrepancies to go unnoticed or unaddressed, leading to inaccurate inventory valuations and potential compliance issues. Professional reasoning. Professionals should approach system configuration by first understanding the business objectives and the regulatory environment. This involves a detailed analysis of the risk matrix to identify critical areas. The next step is to translate these risks into specific system configurations, prioritizing flexibility and control. A structured approach would involve 1. Understanding the business requirements and regulatory obligations related to inventory accuracy. 2. Analyzing the risk matrix to identify high-risk inventory items, processes, and potential financial impacts. 3. Evaluating Oracle Inventory Cloud cycle counting capabilities against these identified risks. 4. Configuring cycle count policies, schedules, and item selection criteria to align with the risk assessment and business objectives. 5. Establishing appropriate tolerance levels for discrepancies. 6. Implementing a process for reviewing and acting upon cycle count results and adjustments. 7. Regularly reviewing and refining the cycle count strategy based on performance metrics and changes in risk profile. This systematic process ensures that the implemented solution is not only functional, but also effective, compliant, and aligned with best professional practices for inventory management. Question 16. The audit findings indicate a significant variance between the on-hand quantities recorded in Oracle Inventory Cloud and the results of the latest physical inventory count. Which of the following approaches best aligns with best practices for investigating and resolving such discrepancies? Option A. Focus solely on identifying and reprimanding the warehouse personnel responsible for the physical count, as they are most likely to have made errors. Option B. Accept the variance if it falls within a 2% threshold, as minor discrepancies are considered normal and do not warrant extensive investigation. Option C. Immediately initiate a system-wide inventory adjustment to reconcile the physical count with the system records, assuming the physical count is accurate. Option D. Conduct a detailed review of transaction history, audit logs, and system configurations within Oracle Inventory Cloud to identify the specific transactions or events that led to the variance. The correct answer is C. Immediately initiate a system-wide inventory adjustment to reconcile the physical count with the system records, assuming the physical count is accurate. Explanation. Scenario analysis. This scenario presents a common challenge in inventory management where discrepancies arise between system records and physical counts. The professional challenge lies in determining the root cause of these discrepancies and implementing corrective actions that not only resolve the immediate issue, but also prevent recurrence, all while adhering to Oracle Inventory Cloud's best practices and the implied regulatory framework of accurate financial reporting and operational efficiency. The need for a systematic and data-driven approach is paramount to ensure the integrity of inventory data, which directly impacts financial statements and operational decision-making. Correct approach analysis. The correct approach, which involves a detailed investigation of transaction history and system logs, represents best professional practice because it directly addresses the underlying causes of the discrepancy. By analyzing the audit trail within Oracle Inventory Cloud, a consultant can identify specific transactions, e.g., incorrect receipts, shipments, adjustments, or cycle count errors that led to the imbalance. This aligns with the principles of good governance and financial accountability, ensuring that inventory records are reliable and auditable. Furthermore, this method allows for the identification of process gaps or user errors that can be rectified through training or system configuration adjustments, thereby enhancing the overall accuracy and efficiency of inventory management. Incorrect approaches analysis. One incorrect approach would be to immediately perform a system-wide inventory adjustment to match the physical count without understanding the cause. This is professionally unacceptable as it masks the underlying problem, potentially leading to recurring discrepancies and inaccurate historical data. It violates the principle of accurate record keeping and can obscure fraudulent activities or systemic inefficiencies. From a regulatory perspective, it fails to provide an auditable trail of how inventory values were determined, potentially leading to misstated financial reports. Another incorrect approach would be to solely blame the warehouse staff for the discrepancy without further investigation. This is unprofessional and ethically unsound. It bypasses the systematic analysis required to identify all potential contributing factors, which could include system configuration issues, integration problems, or errors in upstream processes. Such an approach fosters a negative work environment and fails to address the true root cause, which may lie outside the direct control of the warehouse team. A third incorrect approach would be to ignore the discrepancy if it falls within a predefined acceptable variance percentage. While some variance is expected, ignoring it without understanding its nature can lead to a gradual erosion of inventory accuracy. This is professionally negligent as it implies a lack of commitment to maintaining data integrity. It also fails to identify potential systemic issues that, if left unaddressed, could escalate into more significant problems, impacting financial reporting and operational planning. Professional reasoning. Professionals should approach such discrepancies by adopting a structured problem-solving methodology. This involves 1. Acknowledging the discrepancy and its potential impact. 2. Initiating a thorough investigation using available system tools, e.g., transaction history, audit logs, cycle count reports in Oracle Inventory Cloud. 3. Identifying the root cause, through data analysis. 4. Developing and implementing corrective actions, which may include process improvements, system adjustments, or user training. 5. Documenting the entire process and the resolution. 6. Establishing preventative measures to minimize future occurrences. This systematic approach ensures accountability, promotes continuous improvement, and upholds the integrity of inventory data. Question 17. The efficiency study reveals that the accuracy of inventory counts for high-value, fast-moving items is significantly lower than for low-value, slow-moving items within the Oracle Inventory Cloud system. Which of the following approaches best addresses this discrepancy and ensures the integrity of inventory data? Option A. Manually adjust inventory records based on the efficiency study's findings without investigating the root causes of the discrepancies. Option B. Increase the frequency of full physical inventories for all inventory items to ensure a comprehensive count. Option C. Implement a stratified cycle counting strategy that prioritizes high-value and fast-moving items for more frequent and rigorous counting, while adjusting the frequency for lower-value items based on risk. Option D. Rely solely on random cycle counting for all items, assuming that over time, the accuracy will balance out. The correct answer is C. Implement a stratified cycle counting strategy that prioritizes high-value and fast-moving items for more frequent and rigorous counting, while adjusting the frequency for lower-value items based on risk. Explanation. The efficiency study reveals a significant discrepancy in the accuracy of inventory counts for high-value items compared to low-value items within the Oracle Inventory Cloud system. This scenario is professionally challenging because it directly impacts financial reporting, operational efficiency, and potentially compliance with internal controls and external audit requirements. The core issue lies in ensuring that the system's inventory valuation and stock levels are consistently reliable across all item categories, regardless of their individual monetary worth. The correct approach, which involves implementing a stratified cycle counting strategy tailored to item value and velocity, represents best professional practice. This method acknowledges that not all inventory items require the same level of counting frequency or rigor. By prioritizing high-value and fast-moving items, organizations can achieve a higher degree of accuracy for the inventory that contributes most significantly to the balance sheet and cost of goods sold. This aligns with the principles of effective internal control and risk management, ensuring that the most critical inventory data is robust. It also supports efficient use of resources by focusing counting efforts where they yield the greatest benefit in terms of accuracy and loss prevention. An incorrect approach that relies solely on random cycle counting without considering item value or movement frequency is professionally unacceptable. This would lead to an inefficient allocation of resources, with potentially insufficient counts of high-value items and excessive counts of low-value items. This failure to prioritize risk and impact could result in material misstatements in financial reports, increased risk of stock obsolescence or theft for high-value items, and a lack of confidence in inventory data by management and auditors. It also fails to leverage the capabilities of Oracle Inventory Cloud to implement more sophisticated counting strategies. Another incorrect approach, which is to increase the frequency of full physical inventories for all items, is also professionally unsound. While it might seem like a way to improve accuracy, it is highly inefficient and costly. This approach ignores the benefits of cycle counting and the system's ability to maintain ongoing accuracy. It represents a failure to adopt modern inventory management best practices and can lead to significant operational disruption and expense without necessarily achieving better accuracy for high-value items than a well-designed cycle counting program. A final incorrect approach, which is to simply adjust inventory records based on the efficiency study's findings without investigating the root cause of the discrepancies, is ethically and professionally problematic. This approach is akin to treating the symptom rather than the disease. It fails to address the underlying process issues that are causing the inaccuracies, meaning the problem will likely persist. This can lead to a lack of trust in the inventory system and data, and it does not demonstrate due diligence in ensuring the integrity of financial information. Professionals should adopt a decision-making framework that begins with understanding the business impact of inventory accuracy. This involves analyzing the value and movement of inventory items, identifying potential risks, e.g., theft, obsolescence, damage, and then selecting inventory control strategies that mitigate these risks effectively and efficiently. Leveraging the capabilities of Oracle Inventory Cloud to implement differentiated counting strategies, such as stratified cycle counting, is a key component of this framework. Continuous monitoring and analysis of inventory accuracy metrics are also crucial to ensure the ongoing effectiveness of chosen strategies. Question 18. Assessment of the most effective strategy for selecting an inventory valuation method within Oracle Inventory Cloud for a newly established business unit, considering its unique product mix and operational workflows to ensure both financial reporting accuracy and system efficiency. Option A. Delegate the decision-making process entirely to the IT department, relying on their technical expertise to configure the system with a commonly used valuation method. Option B. Opt for the simplest valuation method available in Oracle Inventory Cloud to minimize implementation complexity, without a detailed assessment of its financial reporting implications. Option C. Prioritize selecting a valuation method that is widely adopted across other business units within the organization, assuming consistency in financial reporting practices. Option D. Conduct a thorough analysis of available Oracle Inventory Cloud valuation methods, evaluating their alignment with the business unit's specific inventory characteristics, operational processes, and relevant accounting standards, followed by rigorous testing. The correct answer is C. Prioritize selecting a valuation method that is widely adopted across other business units within the organization, assuming consistency in financial reporting practices. Explanation. Scenario analysis. This scenario presents a common challenge in implementing Oracle Inventory Cloud, where a business unit needs to adopt a new inventory valuation method. The challenge lies in balancing the immediate operational needs of the business unit with the long-term strategic implications of inventory valuation, ensuring compliance with accounting standards and the integrity of financial reporting. The need to select a valuation method that is both operationally feasible and financially sound, while also being supported by the Oracle Inventory Cloud functionality, requires careful consideration of various factors. The pressure to implement quickly can lead to overlooking critical aspects, making a structured evaluation process essential. Correct approach analysis. The correct approach involves a comprehensive evaluation of available inventory valuation methods within Oracle Inventory Cloud, considering their alignment with the business unit's specific operational processes, reporting requirements, and adherence to generally accepted accounting principles, GAAP, relevant to the jurisdiction. This approach prioritizes understanding the implications of each method on cost of goods sold, inventory valuation, and financial statement accuracy. It also involves thorough testing and validation within a sandbox environment to ensure the chosen method functions as expected and integrates seamlessly with existing workflows. This aligns with best practices for system implementation, emphasizing due diligence, risk mitigation, and ensuring the solution supports business objectives and regulatory compliance. Incorrect approach is analysis. One incorrect approach is to select the valuation method based solely on the perceived ease of implementation or the method currently used in other, dissimilar business units. This fails to acknowledge that inventory valuation methods have significant financial reporting implications and must be appropriate for the specific nature of the inventory and the business unit's operations. It risks misstating inventory values and cost of goods sold, leading to non-compliance with accounting standards and potentially inaccurate financial reporting. Another incorrect approach is to defer the decision to the IT implementation team without adequate business input. While IT can configure the system, they are not typically responsible for determining the appropriate accounting treatment for inventory. This approach bypasses critical business and financial expertise, increasing the likelihood of selecting a method that does not meet financial reporting requirements or operational needs, thereby creating compliance risks and operational inefficiencies. A third incorrect approach is to choose a valuation method that is not fully supported by the chosen Oracle Inventory Cloud configuration or version. This can lead to system limitations, workaround, and potential data integrity issues, compromising the accuracy and reliability of inventory data and financial reporting. It also creates a significant risk of non-compliance if the system cannot accurately track and report inventory costs according to the chosen method. Professional reasoning. Professionals should approach inventory valuation method selection by first understanding the business unit's specific inventory characteristics, operational flows, and reporting needs. This should be followed by a thorough review of available valuation methods within Oracle Inventory Cloud and their implications under relevant accounting standards. Engaging cross-functional teams, including finance, operations, and IT, is crucial. A pilot or testing phase in a non-production environment is essential to validate the chosen method's functionality and impact before go-live. This structured, collaborative, and risk-aware approach ensures the selected method is both operationally sound and financially compliant. Question 19. Comparative studies suggest that when physical inventory counts reveal discrepancies requiring adjustments in Oracle Inventory Cloud, the most effective and compliant approach for recording these changes is to Option A. Create a unique custom transaction type for each individual discrepancy discovered during the physical count. Option B. Record all discrepancies as miscellaneous transactions without specifying a particular reason code to expedite the process. Option C. Utilize the standard adjustment transaction type, selecting a specific reason code that clearly articulates the cause of the adjustment. Option D. Log the discrepancy in a separate spreadsheet and defer any system adjustments until a significant financial impact is identified. Correct answer is C. Utilize the standard adjustment transaction type, selecting a specific reason code that clearly articulates the cause of the adjustment. Explanation. Scenario analysis. Implementing Oracle Inventory Cloud requires careful consideration of how to manage inventory transactions to ensure data integrity and compliance with business processes. A common challenge is determining the most appropriate method for recording inventory adjustments, especially when dealing with discrepancies that arise from physical counts or other operational issues. The chosen method directly impacts financial reporting, audit trails, and the overall accuracy of inventory valuation. Professionals must balance efficiency with the need for robust controls and clear accountability. Correct approach analysis. The correct approach involves utilizing the adjustments feature within Oracle Inventory Cloud, specifically by selecting an appropriate reason code that accurately reflects the nature of the adjustment, e.g., physical count adjustment, damaged goods, obsolescence. This method ensures that each adjustment is properly documented, linked to a specific transaction, and auditable. It aligns with best practices for inventory management by providing a clear audit trail, enabling root cause analysis of discrepancies, and supporting accurate financial reporting. Regulatory compliance is maintained through the detailed record keeping and the ability to demonstrate control over inventory movements. Incorrect approaches analysis. Using a generic miscellaneous transaction without a specific reason code for inventory adjustments fails to provide adequate detail for auditing and analysis. This can lead to regulatory issues if auditors cannot trace the reason for the adjustment, potentially indicating a lack of internal controls. It also hinders operational improvement by obscuring the root causes of inventory discrepancies. Creating custom transaction types for every minor adjustment scenario, rather than leveraging the predefined adjustments functionality with appropriate reason codes, introduces unnecessary complexity and can lead to inconsistencies in data entry. This approach can violate internal control policies by creating non-standard processes that are harder to manage and audit, potentially leading to compliance breaches. Ignoring discrepancies and not performing any adjustments until a significant variance is identified is a failure of proactive inventory management. This approach can lead to material misstatements in financial reports, violating accounting principles, and potentially leading to regulatory penalties. It also undermines the reliability of inventory data for operational decision-making. Professional reasoning. Professionals should approach inventory adjustments by first understanding the underlying business process and the nature of the discrepancy. They should then consult Oracle Inventory Cloud standard functionalities and best practices for recording such transactions. The decision-making process should prioritize transparency, auditability, and compliance with both internal policies and external regulations. When faced with a discrepancy, the immediate step should be to investigate its cause, and then record the adjustment using the most appropriate documented method available within the system. Question 20. Quality control measures reveal that a significant number of inventory adjustments are being processed in Oracle Inventory Cloud without adequate validation, leading to potential data inaccuracies. Which approach best ensures the integrity and accuracy of inventory data moving forward? Option A. Rely on end users to manually identify and correct inventory discrepancies during their daily tasks. Option B. Enable automated inventory updates without any pre-transaction validation, assuming users will report errors. Option C. Defer all inventory data quality checks to the end of the fiscal quarter, performing a comprehensive manual audit. Option D. Implement automated inventory transaction processing with robust validation rules and a periodic reconciliation process against physical counts. The correct answer is D. Implement automated inventory transaction processing with robust validation rules and a periodic reconciliation process against physical counts. Explanation. Scenario analysis. This scenario presents a professional challenge in ensuring the integrity and accuracy of inventory data within Oracle Inventory Cloud. The core difficulty lies in balancing the need for timely and efficient inventory updates with the imperative to maintain data quality and compliance with internal controls and potential regulatory requirements. Though specific external regulations are not detailed, internal governance is implied. The implementation of a new process, especially one involving automated data entry or updates, introduces a risk of errors that could propagate through the system, impacting downstream processes like financial reporting, procurement, and order fulfillment. The need for a robust quality control mechanism that is both effective and practical is paramount. Correct approach analysis. The correct approach emphasizes a proactive and systematic validation of inventory transactions against predefined business rules and expected outcomes. This aligns with best practices in data governance and inventory management, ensuring that only accurate and authorized inventory movements are recorded. By establishing clear validation rules within Oracle Inventory Cloud, such as checking for valid item masters, correct quantities, and appropriate transaction types, the system itself acts as a first line of defense against data errors. Furthermore, incorporating a periodic reconciliation process, comparing system data with physical counts or external records, provides a crucial audit trail and a mechanism for identifying and correcting discrepancies. This approach is professionally sound because it minimizes the risk of erroneous data impacting critical business functions and financial reporting, thereby upholding the principle of data integrity. Incorrect approach is analysis. One incorrect approach involves relying solely on end-of-period manual audits to identify and correct inventory discrepancies. This is professionally unacceptable because it is reactive rather than proactive. By the time discrepancies are found, they may have already influenced critical business decisions, leading to potential financial misstatements or operational inefficiencies. This approach fails to uphold the principle of timely and accurate data, which is fundamental to sound inventory management and financial stewardship. Another incorrect approach is to implement automated inventory updates without any form of validation or exception handling. This is a significant regulatory and ethical failure. It bypasses essential control mechanisms, increasing the likelihood of incorrect data entering the system. Such a practice could lead to inaccurate inventory valuations, stockouts, or overstocking, all of which have direct financial implications and could violate internal audit requirements or financial reporting standards if they lead to material misstatements. A third incorrect approach is to delegate the responsibility for data quality solely to the end users, without providing them with clear guidelines, training, or system-level controls. This is professionally irresponsible, as it abdicates the organization's responsibility to ensure data integrity. It creates an environment where errors are likely to occur and go unnoticed, potentially leading to compliance issues and operational chaos. Professional reasoning. Professionals tasked with implementing and managing Oracle Inventory Cloud must adopt a risk-based approach to data quality. This involves identifying potential points of failure in inventory processes and implementing controls to mitigate those risks. The decision-making process should prioritize preventative measures over corrective ones. This means leveraging the capabilities of Oracle Inventory Cloud to enforce data validation rules at the point of transaction. When exceptions do occur, a clear process for investigation, root cause analysis, and timely correction must be in place. Regular audits and reconciliations serve as a vital feedback loop to assess the effectiveness of these controls and identify areas for continuous improvement. Adherence to internal policies and procedures, coupled with a commitment to data accuracy, forms the bedrock of professional responsibility in this domain.